All right, this is Mackey's Retail Roundup Live. I'm Spencer Israel, Stock Market TV. That's Jeff Mackey from Mackey's Retail Roundup. Jeff, we are doing these streams, I guess, once a week during the retail portion of our earnings season, which we're in right now. We had Home Depot report a couple of
Yep.
days ago. We had Target report this morning. TJX reported this morning. We've got Williams Sonoma coming up. A lot going on in earnings land. So let's start things off but talking about what we got this morning. We got TJX and we got Target, and it was kind of a tale of two cities, wasn't it?
It really was. It was the yin and the yang, Spencer. It was the great karmic forces aligning to produce a balance that equals nothing. TJ Maxx was everything Target wasn't. Target, I take personally. We can get into that. I grew up in Targets. Their quarter was frankly kind of just embarrassing. TJ Maxx came out a couple hours later and they kind of are just gathering what everyone else is spilling. And this is really, I like to lean long because stocks usually go up and I'm just generally optimistic, which was a surprise to me too. But you know what? It's TJ Maxx is just delivering over and over again. You listen to these guys and it's truly everything I love about retail. Comps positive in every department. They asked the guy about margins. The CEO says, you know what? I want every 10th hanger to contain something that seems irrationally low priced. Beautiful, man. Just that is Obi-Wan Kenobi just talking about using the force as far as I'm concerned. That is just old school mystical labor. And you know what else? When you go into a store, that truly kind of is what you want. That's what Target used to be, was this place where you would find stuff that just seemed so reasonable. Like, look at this cute dress I found, my wife would say, spending thousands of dollars on really cheap dresses at Target. You know, it only cost $20. Can you believe that? You don't get that experience there anymore. You do at TJ Maxx or TJX, they call it. You know, it'll all be TJ Maxx to me. But you know what? Quarter after quarter, the good stocks never let you in. You see this thing, they've kind of accelerated over the last few quarters, but they don't care about tariffs. They don't care about anything other than delighting customers. And they crank out positive comps as a result. The stock's a little lower today because they do what they always do, which is what good companies do, is they sandbagged, beat the crap out of the estimates they had. And they said, you know, I'm really worried about next week. You notice that among good football coaches too. You know, we won by 70 today, but I tell you what, I didn't like the way our line played, and they seemed cocky at the end of the first half, Spencer. I'm really worried about Iowa State next week. That's just good coaching, man. That is just good leadership. TJX, again, I'm kicking myself in the ass for not owning the stock already, but you keep waiting for like a 10% dip and, Godspeed on that.
You know what's funny is you were the one that pointed out to me but I guess it was a month ago now when everything was going down with Liberation Day. What was the only stock in the S&P 500 that was making new highs? It was TJX. It was the only one out of 500 or whatever it is, 40.
And yet somehow, we have a reasonable, like between the 300 IQ points that we're sporting collectively, we both came up with the idea to not buy TJX. Just to refuse, there must be something weird going on. Surely they're not outperforming in this tape. You know, it turns out they were outperforming. And again, I just love the juice. You got valuation, you got the story, and you got the technicals. The technicals are great on this. The valuation's a little expensive, but the good stocks always are. And the story is beautiful. They're buying merchandise from the retailers that have already paid the tariffs and they can't move the goods. That's a really nice spot to be in these days because there's a lot of retailers that are kind of just tanking, and TJX goes in, they buy the product and they set it at a reasonable margin and they create magic for customers. That's fantastic. They're not super married to what they carry in their stores. As the CEO said today, again, I was riding my bike today while I listened to the call, basically hold my arms up in the air like I was at an old school revival, because he saying things like, I just want to delight the customers. We don't have a fixed margin. Our traffic was up. Every department went well. And if we find a good product that's going to provide that value for our customers, we're going to buy it. And I'm not sure what our product mix is going to be, but we're going to have a good store. And man, that works so well in retail. It works just so well.
Well, for every yin, there is a yang. So let's talk about Target. I know it's near and dear to your heart. They also reported this morning. We've talked about it. It's been beaten down for one reason or another. What did they say?
We can go to slide 3. This is the first F that we've had. We're new to the report card, Spencer, and we hadn't yet found a quarter that was really kind of irredeemable in terms of just providing nothing to investors for them to really grip into. Target missed on their comps. They missed on their traffic. they started counting for gap estimates purposes. They said, you know what? They want a financial ruling. They went to court and they won. It works out to about $1 a share. They put that in their estimates. And they said, you know what? We feel that's appropriate because we had a bunch of expenses that we expect to go away as well. So just use that. And my point is, it's accounting chicanery that's so far beneath a company like TJX. TJX spent exactly 0 seconds trying to manipulate their numbers last quarter. A company doing that is beyond a red flag. It means you're already sinking. It's more like a signal flare when the boat's actually going under. It's you can't have it. And they started, they're lost. They don't really have a plan. Target, they created a new committee that's responsible for accelerating the implementation of plans that they already have in place. So basically, it's a whole brand new committee in charge of making sure other people in the company do their job. That's kind of lost, Spencer. That's a problem. That you're not, in fact, making a more efficient company doing it. And they put the guy who's apparently the new CEO or the heir apparent in the role of running this ridiculous operation. His basic job is Target needs to go in and just kind of start firing people and asking itself really hard questions, because what they're not doing is satisfying the customer. If you can go down to slide 6, my family's we sent each other slides of retailers back and forth. It's, hey, look at this. I went into Walmart 618 in Ontario, California on Sunday morning, and the place was glorious. I walked in, it just looked like a produce paradise. Just nothing but unexpectedly low priced produce. So just all over the place, friendly people, even at that hour of the morning. My daughter sent me a picture 8 hours later from a Target close to home. It looked like kind of a dumpster and just waiting for a match, which might be the only inventory control Target has left, since they're being protested by everyone, and everyone who's not protesting them just kind of doesn't go because they morally object to really shit retail, which is what Target's offering right now. I didn't like the quarter, Spencer. I guess that's what I'm saying.
I think so. So the bottom line here is the comps, aka same store sales, aka the revenue from stores that have existed for more than a year, down 5.7% from last year. Okay, so generally you want your sales to go up, not down. You talked about the
and that's the lifeblood. Yep.
Yeah. You talked about the accounting chicanery there, and then you say here they're still talking about the social justice stuff. What did they say about that? Because we know they've been in the headlines for probably reasons that they don't want to be.
It's just the fact that it was in there at all is disheartening to me as a shareholder. Let me tell you about the platonic ideal of shopping. And I have an almost religious point of view on this. In fact, it is directly religious. I believe that stores at their best are where the entire community meets, meaning everyone who's involved in the community, meaning everyone should be comfortable at the store. If you're a general merchant, that means we welcome the entire community, Spencer. And I think it's really actually truly elementally important to a society that everyone can go to a store and feel safe. That's a common ground where you trade and exchange goods. Jesus flipped the tables because the merchants were turning into a den of thieves. He was pissed because the retail was bad. And I tell you what, he wasn't wrong. You need safe spaces, and you don't need DEI, you don't need social justice issues. You get involved in that on a retail level, and you're by definition excluding groups who object to that. The stores are designed to appeal to everyone. Everyone likes a clean store that provides better than expected values. That's not a social statement. That is a statement of, you know what, we're good at our job and we're going to add value. That's what good retail is. The fact that Target is down 65% from its highs, it's lost shareholders billions of dollars. Earnings are going lower. Revenues are going lower. And they're still looking for this magic alchemy kind of pursuit where they can find just the right mix, where they're being nice to everyone, but not mean to other people, and satisfying all these parties. You know how you satisfy folks is you give them a fair price and you treat them with the respect afforded to them, implied by a store that you actually bother to clean every once in a while, so it doesn't look like a slop den. You make a nice produce section the way Walmart has, and not this garbage dump of a clothing store selection like Target has.
So you think it is really a question of if, not when, Target gets a new CEO?
Oh, yeah. I mean, well, Brian Cornell has been there for 10 years. He's been there a little too long. It's, we're signaling the bullpen. I'm not sure how to politely to put it, but, there's Minnesota nice, which isn't really nice at all, but it is in fact kind of adverse to actually just go ahead and making the change. In a different kind of space, they would have given Mr. Cornell the hook already. Not because he's a terrible guy, doesn't make him the scum of the earth. It means he's lost the thread. And we're 3 years into this, and he just appointed a committee of accelerating changes. You know who normally does that? The CEO. Normally you have a good CEO, and he just walks around inflicting the wrath of God on those who are not implementing his plans. That, in fact, is what the job entails, I believe.
I'm thinking back to like the list of excuses Target has made really since COVID. I remember the big one after COVID was that they were caught off sides with their inventory. They didn't have enough, and then they had way too much, right? And that was
Yeah.
the excuse in 2021. But that was like 3 or 4 excuses ago. But at this point, right? So
And let me tell you about the biggest excuse, Spencer. And this is yet another reason. And really, honestly, this is kind of the least passionate of them because it's I don't want to go off on a tangent, getting angry. But Target lost nearly $1 billion a year in shrink, just from shrink. Now, shrink is mostly theft. It can be accounting issues. It can be just stuff that gets lost in the mix, and it can stuff gets broken if you're moving billions of dollars of product. Now, that happened during COVID, started in COVID, and it peaked a couple of years ago. They said today on the call that all of the negative margin influence of shrink has been reversed over the course of this year. So Target is finally, between locking stuff up to make it impossible to shop there, carrying less inventory, and imposing security measures of some sort, they've made that back. Now, here's the rub. The margins are actually much worse. And so Target has gained back all that stuff. They're actually making less money now than they did when they were losing $1 billion worth of product that was just walking out the door because people were stealing it, which is just a holy crap accomplishment that they're right not to highlight, because it's frankly just amazing that shrink would have been that much of a problem before. It's not that it's not a great thing that people are stealing less. It's that it didn't help you. How was that not a positive catalyst?
How exactly is that possible?
You become much worse at retail than you do in the middle. There's going to be a margin influence because we've locked up product. Now that's undeniable. You've locked up a lot of goods, and on a net basis, you used to be able to make money by saying having baby food on the counter without locking it up. Like you didn't used to have to lock that up. Frankly, like, should Target even sell electronics when it takes you half an hour to get some guy to unlock the case so you can buy the marked down $50 wire earbuds? That's kind of a crazy business for them now. And so that's going to be a margin influence. But the other margin influence is they just don't sell as much stuff as they did before and at good prices. And so, they complained and were criticized for it, I think unfairly, for saying that, it is in fact a headwind when people loot our stores. But no one's looting their stores anymore right now. The guys doing the damage now are actually in the corner office, the ones that are just kind of sitting around saying, we should hire a committee to really enforce these ideas that I have faster. I've got feelings. Spencer, I promise I have feelings.
There's a lot there. We could probably talk about this a lot longer, but we have other stocks to talk about. So
I could teach a class on it. So yeah, we should move it along.
That's kind of what this is. This is Retail 101.
There are lessons to be extracted. Yeah, we did learn things we can trade in a more productive way than just railing at the machine.
All right, Urban Outfitters. Let's talk about it. This chart looks good. The stock has been good.
Bonkers good, right? I mean, it's all-time highs. TJ Maxx, another one, all-time highs. These are like bar questions. And before Google was so available, we used to ask friends questions at bars. You make stupid bets. Who had a higher career batting average? Who did Kirby Puckett beat in '86? Don Mattingly was the answer. But but one good bar question is, name 2 stocks in retail that are at 52-week highs and just kind of hanging out there. TJ Maxx, Urban Outfitters. They report tonight. I think they'll be good. Are they good enough to kind of make traction to the all-time high? I don't know. We'll see. It's only up 10% for the year. Like a lot of these retailers, they've just been so pistol-whipped over the last 6 months. Fairly or not, the outcome for the tariffs, as you so astutely pointed out, was being priced in about 3 weeks ago. Is maybe things aren't so terrible. And so that outcome is kind of coming true. Urban Outfitters is a pretty good operation, much better than they used to be. But they should be appealing to customers and of kind of in that on type of territory, that Aritzia group. Remember that little Canadian retailer we followed before? They posted just crazy comps, not by doing anything magical, but just by kind of being a good store. Urban Outfitters makes great stores. I think Anthropology has a big, if you drew a Venn diagram, a big overlap, and the expectations for Urban aren't that high tonight. It's not my favorite stock, but for people who trade kind of the mall things, we're seeing really good results and really good numbers from companies that simply show up and kick the crap out of numbers and don't whine about tariffs. Retailers that aren't telling you that the weather's bad, that the consumer's scared, that folks are just looking for a bargain. The ones who aren't economists and are just doing retail stuff, and Urban Outfitters definitely qualifies for better and worse. Those stores tend to outperform. And so I think Urban comes in tonight, and I think this is a good environment to be able to post really good numbers, just flat out kind of nice comps, 5-6% type of comps. When Urban's hitting on all cylinders, it's a pretty good little chain because they've got a nice dispersion of between Urban, Anthropology, and the different headline companies they have. It fits a bunch of different income groups. I think they report pretty good numbers tonight. It's an interesting long idea. I wouldn't short it with someone else's money.
And it sounds like you wouldn't even be surprised if it went down a little bit either tomorrow, but long term, you still think they're crushing it.
Yeah, I think charts like this, particularly in specialty retail, until the underlying factors change, you got that big fat line for a reason. It hits that big fat line, just shut up and buy it. Breaks that big fat line, decide when to sell. It's up to you. I like my line stick, so it's not going to be a matter of pennies. I'll give it like $3-4 below that, but you'll be able to see when the uptrend breaks. But in the meantime, just kind of have faith. They're outperforming. They've done enough now to establish that they're on a heater. You want to bet the heater in specialty retail. They don't last forever, and you're going to miss the last quarter. Don't be shy about taking profits. But it's Urban's doing well, and I think that they're going to continue to do so.
All right. What about? Oh wait, no. What about Williams Sonoma here? They also are they tonight as well?
No, they're tomorrow morning.
They're tomorrow morning. Oh, so, okay. Same idea. It's they're in tonight's overnight session, which in my mind is tonight/tomorrow morning.
Right.
So I was in Williams Sonoma over the weekend. I didn't buy anything, but I'm always afraid. I'm intimidated by that store. They have a lot of.
It's a little scary. It's a little. Yeah.
It's a little bit of a scary store.
It's kind of designed to be. You're a new dad. Like, you're not comfortable with this crap yet. You're not supposed to be, Spencer. It's not your wheelhouse, really. And so they're not afraid to scare the crap out of a husband walking in there saying, "Oh, I'm going to look to buy a coffee machine that the wife would like." They'll take you. But it's an excellent store. It's got a fantastic CEO. Did you see the Preakness last weekend? This is not as much of an aside as you would think, but did you happen to see the race?
I watched a replay, a highlight. I didn't see it live, but I saw it. Eventually,
it reminded me of something a friend of mine, Mark Hodge, used to say, which is, you bet the jockey, not the horse. Now, the wontons that it took on that horse to ram that, he jammed him through a space that simply didn't exist, plowed through him, and rode journalism to the victory. That was incredible. Williams Sonoma has an amazing jockey. Laura Alberts is one of my favorite CEOs in all of retail. Smart, on the ball, and will not, in fact, whine about tariffs, the economy, or any other damn thing. She's going to come out and she's going to say, you know what? We could be bitching about housing, but that's just not how I roll. And she's going to post decent numbers. Williams Sonoma is a constantly underrated company because, frankly, they get that kind of resto. We're just dependent entirely on housing overhang a little bit.
Yeah.
They're selling expensive coffee machines. All we learned from Home Depot and Lowe's, and there's a reason I'm not paying attention to such enormous companies, is because there's economic data if I want to be bored. Our comps are flat. People aren't doing big projects, and they don't feel poor. That's all kind of in the no shit category, except the last one, which is they don't feel poor. That means that they're doing smaller stuff. No one's going to kind of redo their entire house with interest rates still high and the economy uncertain, because that's a weird combination. It's not like I'm getting a deal on either side of that. But they're buying coffee machines. We saw positive comps in housewares from everyone except Target. Walmart said things are okay. TJX said things are just fine. I think Williams Sonoma, having been poleaxed again for so hard, and maybe not incorrectly if you're talking about a worst case scenario with these tariffs, but now we've got this 90-day moratorium, so they're not going to run out of product. They're going to be able to be fancy enough to be scared, you and I both, during the holidays. I went there last Christmas. They had Santa mugs set up with such precision that I kind of was a little embarrassed, and I was clearly not shopping, and the store manager kind of sniffed me out and scared me. I'm a retail professional, Spencer, and she was just like, can I help you, sir? Are you just admiring my product? And it's like, I'm kind of just, those are really nice mugs. You've got really good Santa mugs. That's the kind of execution you get there. And I think there's a space for that. Expectations are pretty low. We may or may not be long the stock, wink. But I think that they're kind of going to be burning up. They got too sold off, really, and you don't get to buy CEOs this good at a discount very often.
Williams Sonoma. So the all-time high was what, 217?
217 or 170 ish. It got down to like 150 something ballpark. I don't have in front of me.
It got down to 156 a month and a half ago.
Yep.
So it's well off. I mean, it's up $30, $40 is what is it? It was 130. It was 130. I'm sorry. What did I say? It was 130.
When did it get 130 for 25 seconds? When was that? That was a year ago, or that was the most recently?
Yeah, that was when was that? April 4th, 130.
We were probably busy talking about TJX and not buying that. Too busy, but But I tell you what, though, this is a company that they needed the China thing. They needed that pause because I would have been worried about them restocking their shelves. Frankly, it's just there's enough of a supply problem there, just in terms of the number of companies making the super expensive coffee machines and whatnot, that it's hard for them to flesh out their supply chain unless they got that moratorium. They got it. It's what they needed. They got it. It's well enough run that I don't expect them to take a huge tariff bang. I also think the market will be forgiving if they do. I don't think anyone's expecting huge comps. You're not going to get 20% comps like you do when Laura's really cooking with gas and she's got a good economy to work with. But you're not going to see down 10% comps either. You're not going to see a huge negative surprise. So even a miss there won't get punished. If I weren't long the stock already, I'd be looking to add more tomorrow. And also, again, the risk is to the upside. I mean, did you see Canadian Goose today? If Canada Goose can spike 28% just for not dying, then surely there is space in the mall. Surely, it's if they're buying $900 coats, Spencer, you use your coffee machine every day. The $900 puffer that you're going to buy at Canadian Goose is probably not something that's really an everyday object. So, Goose spoke to me this morning, just like Maverick. And he said, you know what, Maverick, the high-end consumer is okay. And I chucked the dog tags right into the ocean and I'm considering buying calls. That's where we are.
This is now an 80s movie show, apparently.
We're all over the place, but I don't sleep that much during earnings period. There's 4 majors a year, and that's, for me, it's earnings period, and I'm just collecting green jackets, baby. I'm here to Nicholas this thing.
If I had a Top Gun quote at the top of my head, I would say it, but I can't think of anything right now. Let's wrap it up here. You mentioned Home Depot. They reported a few days ago, and to the point about Williams Sonoma, and the same goes for Home Depot and Lowe's. If they wanted to blame the housing market, they could, because all these companies are really dependent. When people move, they are more likely to buy new stuff, right, for their house. The housing market is kind of frozen right now. So not a lot of people are moving. There isn't a lot of activity. Therefore, people are probably not buying as much new stuff. But maybe they are doing more renos or things to the houses that they live in right now. So, like, in theory, is this good for Home Depot and Lowe's?
Strong to say that. It's Home Depot is going to be reliant on just that customer who comes in and we're redoing the whole damn place and I'm buying a yard. I'm buying it. I need a whole yard. It's Lowe's. You need kind of bigger projects, but what they are saying is you get those little refreshes, those little spruces. And that's why Home Depot and Lowe's have been okay as stocks, but that's also your potential. That's your skinny little window for the Williams Sonomas of the world. That if we can get through there, and you know what, we're appealing to customers who, otherwise might move. They're kind of on the fence. But instead of moving, let's just give the place a little spruce. Let's just give the place a little step up. And Home Depot and Lowe's both said that they saw that consumer there. People aren't doing the big projects. If you're going to take a loan, there's a crap time to rent money or borrow money. The rates are just too damn high. But if you're just refresh, if customers are feeling poor, on the other hand, they won't buy anything. But that's not the case. That isn't what we're seeing from these consumers. Consumers are being picky in the sense that they're not going to crap retailers at all. Which, life is tough, but I guess there's a penalty for being a crap retailer. You don't have the tailwind. But then again, when you see numbers like Target's a big company. Still, somehow, it's $100 billion a year company. When they're spraying share out there. They're negative on apparel. They're negative based on every single comp they have except groceries, which was a little bit cooked. That means that share goes someplace else. When Nike is declining, that means On does really, really well because they're a tiny company and they're going to be able to pick up that share. Williams-Sonoma is just a tiny little company compared to Target. Target's blowing up all over the place. That's nice for TJX. They're happy to buy Target stuff. It's nice that the Target had weak housewares sales. Normally in a real bad economy, it would be bad for all of them. In this kind of economy, it's bad for Target and possibly good for Williams-Sonoma on the margin.
All right, Jeff Macke, you can be my wingman anytime. We are done with this stream. If you want to get Jeff's free research or find out what is in his portfolio, what he's buying and what he's selling, those links to both those are in the description below on YouTube. And yeah, it's earnings season, so keep on keeping on, Jeff. We'll have to find out what you think. All of these reports tonight, tomorrow morning, and then next week, which will kind of put a bow on the whole thing. And we'll find out what people say. So
absolutely. Great balls of fire, Spencer. Let's do it, man.
All right. Drop us a like. We'll see you guys next time.